Greetings to the faculty. I am Uzaifa and I am going to initiate the presentation on investment opportunities in stock market. So first I am going to give a quick definition of what investment is and the opportunities given to us or provided to us in India for investment. And then we'll talk in particular about investment in stocks, opportunities that we are given in stock market for investment. So first, investment. The investment is to allocate your surplus, your money into something from which we expect a positive return in the future. Or in other words, to invest is to own an asset or an item for the goal of generating an income in the future from that investment. Or we can say that we expect an increase in the value of the asset we have invested after a period of time. Now we'll be discussing about investment opportunities provided to us in India. There are several opportunities where people invest in India, which are stocks, fixed incomes, money market accounts. They have real estate, commodities, gold market, and mutual funds. And there are startups and IPOs in which people invest. Now we'll be talking about only in particular about stocks because our topic is investment opportunities in stock market. So investment in stock is one of the simplest ways to invest your money, and it is one of the simplest to understand. See, we have a common idea about how stocks work or stock market work. Like we buy stocks of publicly traded company, and then we expect the stock price to increase. So we get money gain or we gain money. But as the stock price falls, we lose money. It is a common idea which everybody has, but stocks can get complicated way more than that. And it fluctuates because stock prices fluctuate very rapidly. And however, there are opportunities when we can spend money, invest money in stocks also, but in other strategies like growth investing, value investing, and dividend investing. But in particular, if we talk about growth investing is a strategy in which an investor only invests in stocks which are above average prices. Like those investors are known as growth investors. So their particular main motive is of capital appraisal. So there are ample opportunities in stocks as well. Now further presentation will be given by my fellow groupmates. Thank you.
Good morning, ma'am. My name is Mohit Tiwari and I will be explaining about the investment opportunity in stock market. So there are some investment bases, which is stocks or shares, the bonds, derivatives, and the mutual funds. The stocks or shares. So when you buy a stock which is consist of shares, you buy them with the intention of selling at the price, at the profit, and thereby the earning or returns on your investment. The difference between buy and sell of price is the stock market version, and in the end of the interest on more on traditional form of investment, such as the fixed deposit. Share price fluctuate constantly, which is also known as the fluctuation. That makes the profit possible in the stock market trading. Now we will talk about the derivatives. Derivative involves the making of contract to buy and sell of commodities. That is the buy and sell of the commodities which is on the specific date and the specific rate. The derivative is also commonly referred to the F&O stock, which is future or option stock. It is a major type of stock which derivatives traded in the stock market. The these are the contract which is signed by the two parties for the trading stock assets at the predetermined price and on later date. For example, the City Union Bank and the uh, Small Finance Bank. Thank you. Now the next slide will be continued by my teammate.
Hello, I'm Kushal Shrivastava and I will continue this topic bonds. What are bonds? Bonds are one of the most safer way to invest in the stock market because they ensure a certain rate of interest by a certain rate. The interest may fluctuate but will not dip below the rate of interest. Bonds is a debt instrument issued by the government, corporation, and other entity for raising the funds. Bonds is a written or signed promise debt investment in which an investor loans money to an entity which borrows the funds for a defined period of a time at the variable or fixed interest rate or like coupon rate. Second, mutual funds. What is mutual fund? Mutual fund refers to the mutual trade of financial instruments on the stock market because it calls for many different investors pooling their resources and investing the variety of different stock for insurance. Mutual fund is a trust that pools together the saving of number of investors who shares the common financial goals. The money thus collected is then invested in the capital market instruments such as shares, debentures, and like other securities. In simple way, mutual fund is a common pool of money into which investor place their contribution that are to be invested in different type of security in accordance with the started objectives. So at last, mutual funds are one of the most popular method used by the Indians when it comes to investing in the stock market. Thank you so much.
Hello, my name is Rishabh. The benefits are first, regular gains. The Indian stock market allow you to invest in shares to earn income in the form of dividends. Company pay dividends to their shareholders every year out of the profit. You can get these dividends in the form of cash, securities, and more share units. Next, long-term gains. You can also invest in Indian stock market to create a diverse investment portfolio for a long-term gains. As the company grows, the worth of your shares also grows, which can help you to make a huge profit in a long run. Next, divisibility and financial planning. Shares are a liquid assets you can buy or sell in the owning of your financial planning. Stock also offer the feature of a divisibility, which gives you an opportunity to sell a certain part of your shares when you need money. While you can sell a certain part of your shares, the remaining shares will remain invested for a long run. Conclusion: to grab the best opportunity in the market and make quick gains, you need to stay up to date with the economic environment and stock fluctuations. Also never put all of your savings into the stock market. You should rather invest your surplus funds only. The Indian stock market definitely open up a countless opportunities for investors. Thank you.